Hello and welcome to the Friday wrap-up presented by the Gokhstein News Network. I'm your host, Landy, and today is October 10th, 2025, and Bitcoin had a really big move. Traditional markets had a really big move. And before I get started, a lot of this has to do with, of course, some of the comments made on social media and by the Trump administration regarding trade and tariff policies. And did want to let you know this is not unique to the United States. In fact, what China is doing is going to affect many Western nations, not just the United States. This in particular, and what Trump was referencing, has to do with South America, specifically, Besant last month in September had provided some liquidity by buying the Argentinian peso. So. And then, of course, there was a big trade that China did out of the back of that as well to avoid some of the ag trade that was kind of tentatively agreed upon with the United States prior coming into this quarter. So this is going to have some far-reaching effects in terms of trade policy for many Western nations in regards to China. Not just the United States. So this is not unique to the United States, which is why we're seeing global movement across crypto, which, trades globally and 24/7. And of course, the traditional market sold off, Bitcoin sold off and hit a few key levels on the way down. And in fact, Bitcoin played out the lower likelihood trade with a lower low swing, no lower low close, but a lower low swing. Still has a chance for higher low structure after, we had this uptrend break here. We had the uptrend break off of this daily level, this key level around the 107 to 108 region over here before making these new highs. We came back and revisited that, went into an uptrend, trend broke to the downside, trend break right back to the upside, and swing trend break to the downside, but no closing trend. So there still is the opportunity for a higher low. Trend reversal set up on a closing basis for the daily. Thing is, when you see a higher low close with a lower low swing, that is caution, look out for lower highs or consolidations and then push back down or continuation because we need to see a higher low. But if we do see a higher low close, that is a big if, we see a higher low close that remains above this last lower low, that wick is a caution. That's telling us that, hey, could this be the low? Sure. Yeah. In fact, it's a very high volume low, and I'm going to get into a few things here, including the largest wipeout of open interest that we've seen in Bitcoin's history and in market history, for that matter, for crypto assets when it comes to derivatives and futures. But high volume, possibly marking this as a low doesn't mean it doesn't get explored. And possibly pushed past further, especially if this turns out to be the actual topping structure up here in the longer term timeframes, which again, I keep mentioning this. I'm Q4 to Q1 in terms of timeframes still, even though the door is open for an extended cycle. I still very much firmly believe that door is wide open, but we have to see confirmation for that. And we are not seeing any of that confirmation, can only really see that confirmation once we start getting in towards the latter part of Q4 and Q1, if it were going to happen of next year. And right now, structure is checking all the boxes for normal liquidity cycle timing for Bitcoin and cycle timing for Bitcoin until proven otherwise. And there are some valid points that can provide for the validation of a longer term extended cycle, but we have to wait for those confirmations. Such as expansion to the upside on the monthly or expansion on the quarterly to the upside, which has not happened. We haven't seen quarterly expansion yet of the Bollinger Bands specifically. So that volatility metric is a very important one for me in my analysis. Now, what have I pointed out here? This is all downside structures. This is a weekly structure, so this is the last weekly high or low. We have a complex high that was put in, yes, swing downtrend on the weekly into a weekly high or low right around that 107.250. That has now been run on spot. We got to 107. Derivatives and futures got much lower. In fact, they hit this area down here, 101 to 102, which this is the prior weekly high or low structure down here. And then the next step down there is 93.5 to 89, which is another weekly higher low. Before we get into the big monthly, which the last monthly higher low was 82.5 to the low here at 74, 420.69. And then, of course, the lower low weekly down here before breaking back into uptrending structure on the weekly was at that 78, just about 78.4 to around 74, 420.69. Now, what does this mean? We just saw something very important happen, and that is a massive dump off in open interest, a really big move down in traditional markets. A lot of this move, although it was ongoing when traditional markets closed for Bitcoin and other cryptocurrencies. Most of the move occurred after traditional markets closed. Now, we had a big sell-off in Dow after putting in a new all-time high structure up here. Big sell-off, trend break, breaking this uptrend here. Pretty bulk standard stuff. Same thing with NASDAQ breaking the uptrend after putting in a nice W bottom here and launching itself to the upside. SPY, same deal, breaking that uptrend. In fact, maybe NASDAQ didn't actually close on a breaking trend. Nah, it didn't. Likely going to open on a breaking trend on break of trend on the Monday session, but remains to be seen. Big moves. Everyone, of course, in traditional markets watching VIX with a big move up. And this is in expansion territory for the daily. And it also is, as of the Friday close, hit expansion territory on the weekly. So could we be looking at another Six Sigma event? I don't know, to be quite honest. Most of the tariff stuff that's been talked about is earmarked for November 1st. This is actually not like a big, huge secret. Funny timing, though, when you start to think about like the players that have been making moves in markets. Like everybody kind of saw it coming, but it was all about like when is he going to talk about it in regards to what's happening, what we're seeing in terms of global trade right now. And I mean, he chose a Friday fairly early to talk about it. And then the market really took advantage of it throughout the day as Trump expanded on his points and his administration expanded on their points. And in this case, traditional markets could have some further to go. That's likely going to pull, crypto markets down as well. I did want to show that, a lot of like, Bitcoin on Kraken hit a low of, 100,000. Bitstamp came in actually pretty. It actually didn't go as low. Interesting, but it's not really heavily traded anymore. But 109. We had a low of 105 on the daily here for the index. You got Bybit, I believe, hit 102. Binance hit like 101 to 102, depending on which pair you're looking at and which contracts you're looking at for futures or derivatives. So, just kind of lending credence to that big rundown that derivatives got and futures got down to the next big weekly level here at that 101. And, there's close for the market was around the 117, right in our 116 to 118 level. And, Bitcoin just kind of blasted off through the levels to the downside post close. So one of the big things to watch out for is for this swing to be filled out. And a further move down. I will say the band setup on the daily is neutral now, but it is neutral to bearish, providing for some possible swings down below into like the 106 region, which is right around this last low, which is the 104 to 106 that I've talked about before. You split the difference at 105. That's where this low is coming in. Anywhere below there, then we're looking to that 101 by the lower third standard deviation to possibly 98 to 25. Big thing for the weekly though. We're coming off of, a lower high trend reversal, a lower high trend reversal setup, that did get absolutely annihilated back to the upside and then a swing down below. You're going to see a lot of people are going to get intensely bearish on this. It remains to be seen. Lower first strike right there on the weekly. Closes above the basis band are going to look okay. And this is a compression still and a bit of a range to the upside. We need to see closes above, 124 to 124.5 to even start to get that expansion back to the highs here and potentially higher to 128 to 130 for the weekly. I've talked about that. That's the big 1414 Fibonacci level that is confluent on both prior structure, more local structure, last higher high in the monthly to higher low in the monthly, and a macro structure from last cycle's high at 69 to the $15,500 low is that 1414 right at 128 to 130. Still in the cards, even after this big move down. So just understand that what we need to see on the daily from the bulls is a higher low and a close. Be aware that with the lower low in place, that is caution that even if it puts in a higher low and a close, it needs to confirm trend reversal setup on closes back above the all-time high now, and then start to push above upper second. We're likely going to see, if a higher low is put in, bands start to squeeze back together. Be aware of this basis band and stuff like that. So that's just pay very, very close attention to what's going on with price structure on the daily, because that swing low, break below the weekly and the daily levels, while it could be a liquidity grab and then up and away, just be aware that it's not always the case. We could just see a higher low close and then right back to a trend reversal setup on the daily, that takes out a higher low close. And then we're right back into, where the trend is your friend until the end of the trend. And when the trend is unclear, everyone's in fear. And that's where everybody would be in fear. Let's go ahead and turn on local support and resistance zones of interest. As I beat that horse to death on that last little bit here. Any closes below 112, going to start to target, inside of this 112 to 109 weekly level, with their dailies in between at around 111, just below that lower first. If we started to push down towards that, you'll see the lower first dip right into that 109.5 to 111 daily level there, just below 109. We're back running this area here, endangering closing structure on the daily here to fulfill a trend break, for essentially an uptrend break to a trend break back to the upside to a trend break right back to the downside, which is a nice whipsaw market for you. Anywhere below the 107, we're looking, 104 to 106 with this important daily level right around 105. Swings below to 103.5 or upper 103 region would be around the 1272. And that's a macro fib level. Be aware that if it swung down and then closed back above, that would be, better than not, and it wouldn't be immediate continuation to the downside to that 101 to 98, 225, but that would be, any closes below 105, 104, we're probably looking at that 101 to 98, 225 big weekly level with an actual weekly break to the downside. So big thing on the weekly here. And I'll talk about overhead stuff in just a moment here, but big thing on the weekly to watch here is, yes, we had a swing downtrend start to form here with higher low, higher high, lower low, but this was a complex closing high to complex or to a clear higher low trend reversal setup that didn't complete back to the upside. This is indicative of, typical consolidation and compression on a weekly time frame. But if we started to see closes below this weekly at 108.250, of course, that drop that up that lower first that was just hit right around that 107.250, 107 region, we're looking for the next big area at the lower second, which is 101 to that 98.225. If this area was dropped, that would put price below the lower second in expansion territory to the downside, targeting the next big areas, right around 95.5, 93.5 rather. 95, 96 would be a point of control for this range over here, but really targeting that weekly around 93.5 to the swing low at 89. And that's also where we had this swing high come in, essentially 89 on spot. That would be like expansion into that area over here, confluent with this high over here, and then further expansion would be endangering that monthly structure down below. We're a little far off from that. It might take a while. It might not take a while if it was going to do that move. Same for the upside, right? Like I said, we need to see close above that upper second that can close above 124.5, and then of course get continuation above the most recent all-time highs to kick off closing structural expansion for the weekly to the upside, and a run to much deeper targets, I think, than even 128 to 130, because on a closing basis we would be kicking off expansion. So not too much to really say in that regard. I want to get into what is, I think, really interesting here is open interest. This is the largest dump off in open interest that we have seen in Bitcoin's history. I want to just kind of mark this up a little bit. This is a rare event. You're here for it, and Bitcoin's still holding the range. Crazy stuff. That's actually kind of crazy when you think about it. Like, it's still holding the range after one of the biggest dump offs in open interest. Derivatives just absolutely getting washed. But we don't have a lot of data here. This is Coinalyze. This is a free, is coinalyze.net Bitcoin open interest chart. And you can go and explore this if you want. You're going to get the same general outlook for open interest metrics on, Crypto Quant, Glassnode, and stuff like that, which are a bunch of paid services. But right here on the weekly time frame, we essentially got a strike right at that weekly area, that weekly closing lower high that had the higher high before the big dump off. We're in a different position now. Higher high closes didn't get continuation above the highs there, though. That's the real problem on the weekly. So this is just kind of consolidating sideways. But more importantly, this here, even looking back to last cycle, which we don't have the metrics here for the first top that came in, but I can tell you that the biggest dump off in open interest happened, when we saw a high put in on the weekly time frame, and then it tried to put in a higher low here and just went sideways and kind of just made a bearish flag and then dumped out. Trying and then rejecting off of this area, but running the lows and then rejecting off of the September highs here that were coming in at like 53, 54, 53 and a half, 54. That was the biggest dump off we had seen in open interest in the history of Bitcoin at that point. But the higher price goes, the larger, the amount of open interest is going to be in the market anyway. So it's not anything crazy, but it is kind of crazy to see a big dump off in the weekly like this. So pretty rarefied air up here. We had, this is wild. Almost $47 billion in open interest get dumped off right to a weekly level, in open interest around 32 billion. That's a beautiful washout while maintaining structure, especially if it closes like this. That's a beautiful open interest washout, which very well could be that this is the low. Doesn't mean that it doesn't get plumbed rather. It also doesn't mean that it does, but it's more likely that we're going to go and try and fill out at least portions of the wick, even if it is going to make higher low closes. It's all about, if it does make a higher low close with that lower low swing on price action being in place, watch lower highs if we do see that higher low on a closing basis, because the lower low is in already on a swing basis. So, what I will say is, I've mentioned that I've been short. I've been shorting, above the 125 region. And I would have been building out short positions up to 128 to 130 anyway as a hedge against my swing longs that I was taking off the weekly. And I was taking profit on those on the way up, on the swing long side of things. Moved my stops to profit, got taken out, obviously. And now it's about identifying the next, swing long, and I am long off of a lot of things now, but I'm still holding on to those swing short positions. Right, I've taken profit on them on the way down, and I took some really heavy profit, especially in the alt markets. But they could, things can still bleed more. And if the setup turns the right way, I've now got a good spread for the range, being swing long on one side and now starting to build out a long position on the other side. I'm not there yet in terms of calling it my swing long size. It's more in the scalp territory or long scalp territory area still in terms of sizing. But, if things come back down and start to turn around or put in a trend reversal setup, I will go swing long, but I'm still hedged swing short, not letting those go until I see the signs that that things are going to continue back to the upside in earnest. And that's where we should talk about upside and some of the daily levels overhead that I like to point out. Right, lower term timeframes. By the way, I'll show you in just a moment. Like just the absolute beautiful step down that we had for the daily area. So daily zones of interest. We got into the closing area of the 113.5 to one. To this closing area of resistance here at 113.5. Closed in between there and the weekly at 112, just swept that weekly at 112. Of course, shot right through the weekly and that daily down below for the lower low. In lower term timeframes, it was kind of beautiful the way that this stepped down for spot price, losing the 120, 119.5, 120 area, stepping down to 118, finding that as resistance, stepping down to the high side of the point of control up here, which I don't usually talk about as I just show this kind of stuff, but right around the 116 area, and then failed, pushed through our 114.750, and then dumped down to the 112 into the daily inside of the 112 to 109. Started to then open and dip down in there through the bottom side into the daily, bounce back up, find 114.750 as resistance up here, and then dump back down to the weekly. Very, 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 very clean spot structure, to be quite honest with you, for such an extreme move in the derivatives markets. And we saw a massive premium on spot over derivatives during the dump off and wash out of all that open interest, which is kind of like a nice fresh start for open interest, which is one of the reasons why I say be cautious if you're really bearish. While we might come back down and fill out some of this area for liquidity, that's a big amount of open interest, and spot also had a lot of buys coming in. So beware that this could potentially become the actual low, and then things start to move on back to the upside. So again, back to the upside above 114.750, look to 115.7 to 116 up here. And then above there, look to 118. Anywhere above 118, we're just stepping it right back up. 120 to 121. You could take the weeklies at 119.5. Kind of where things started to fail and fall apart was around that weekly high at around 119.5. But above 121, shorts are back in danger zone. They don't have too much cover. They've got a little bit more cover than they've had before because realistically, they've got one more zone to kind of hedge against, because a lot of the shorts were taking kind of where I was around the 123 region. 123, 124. I know a lot of people were taking short positions. Talked about this in different spaces, events, and stuff like that. I think my swing is probably averaged in around, high 122, 123 for most of my positions across various perp dexes and centralized exchanges. It's somewhere around there. And of course, that was hedging and utilizing a lot of the profits that I was taking off of my swing longs off the big weekly levels. So now we're back on the other side of that. Can't really push out the shorts until we get above, at minimum 121 again. So just beware of moves back to the upside, resistance overhead 114.750 to 116, essentially 116 to 118, and above 118 we could potentially see 120 to 121. If we get a mega pump back above there, there's the consolidation highs that we saw in through here around 122.5, but it's really all about that 123 to 124.5, 125 area. Above there, then shorts really do have to race for cover and probably going to be repositioning very heavily. But we got to see what traditional market players want to do when we open back up on CME on Sunday into next week, because traditional markets looking like the correction is ongoing still and just barely getting started. Could they provide for some sort of a bounce? And then we see what's going on, or like some sort of a rapid recovery. We have to really wait and see how traditional markets react, how the bigger players come in, and if they're going to start bidding up, or what they do during CME Open on on Sunday. So pay very close attention, and I hope that you were in winning positions, or got into winning positions and didn't get hurt too badly on the move down. I know that a lot of you that listen to or watch videos or listen to me on Spaces are likely in spot positions. Look, I'm not. We are in a period where I still am of the mind of Q4 to Q1 is where we're likely going to see a macro high coming in until proven otherwise. So I'm not going to be the one that's going to be telling you to ape in all these positions. Just trade carefully, even if you're in spot, right? Take advantage of the moves and have a plan. That's really what it comes down to. I trade markets, whether they're bull or bear. I don't care, right? So it is not about whether or not we go into a bear market from here, or if the bear market's around the corner, if we go into an extended cycle. It doesn't matter to me. I'm taking the moves as I see them, level by level, based on my trading setup and my risk tolerance and my sizes, right? But I have to hedge my positions when price rises. So I have to get into shorts because I have spot holdings that I'm protecting, right? And on the way down, I'm going to ride those shorts to take profit for more of the tokens that I want to keep accumulating. Not everybody's in that position in these markets. A lot of people are spot holders. I don't think there's ever a bad time in the longer term to buy Bitcoin. I know there's people who hate that I say that. But in the longer term timeframes, I don't think there's ever a bad price for Bitcoin this early in the game. We don't even have the Bitcoin Act passed yet. There's still regulatory clarity coming out, like all that kind of stuff regarding crypto markets. Crypto is becoming a much bigger deal around the globe. We're going forward, not backwards. So, like, just use your judgment. And I wish you all luck, and I hope that you're winning. And, if this stuff is still not making sense to you, or how I myself or others are arriving at our conclusions for price and how price moves, I really do encourage you just to do the basics in terms of trying to understand, trend, support, and resistance. And then a lot of this will become a lot clearer. There's a lot of different methodologies for looking at this stuff, but at minimum, trending, structure, and support and resistance areas of interest, and how to identify that stuff, anyone can do it, right? And that alone can help you in positioning in spot or taking trades. And yeah, that's where I'm going to end it. I hope that you all have a great weekend. I'll talk to you again on Monday. Please like and share this video out there. And when we'll kind of see where things go, next week, I think it should be very interesting. Again, this is very early in Q4, so I wouldn't start to make full-on conclusions until we're further along in Q4 and seeing these weeklies develop. Pay very close attention to the weekly. Want to see closes above for the bulls, need to see closes, and want to see closes above that 108.250 on a close. And then, of course, 107.250 on a swing. Otherwise, things start to look a little bit different. But the macro still hasn't changed too much in terms of its outlook and picture. So, you have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. I'll probably provide some updates on charts, show them as like little cheat sheets, as addendums to this video. Does help if you like and share this stuff. I hope that more people can watch this and have a better understanding of what's going on in the markets. So take care of yourselves. Have a great weekend. Talk to you on Monday.